Tax season, it is upon us. Well, if you've recently retired or are helping your parents file their taxes, there are a few extra rules that you need to know about. Chris Orestis, president of Retirement Genius, shares some common tax traps as well as some opportunities to take advantage of savings.
You're going to tell us whether something can be a money trap or an opportunity to save, right?
Right, a tax trap or a tax opportunity for seniors.
All right, well, first up, Social Security benefits, tax opportunity or tax trap?
Social Security can be a tax trap, and people need to be aware. They don't realize that if they're still earning an income while they're collecting Social Security, which I always encourage people to do, but there still can be a tax consequence to earning too much income when you're on Social Security. So in 2022, be aware, the limit is $19,560. If you're earning more than that, then there can be taxes against your Social Security benefit. Again, don't let that scare you off from earning some income, but just be aware that there will be some tax consequences.
What about Medicare premiums?
If you are paying Medicare premiums and you're self-employed and not eligible to be on a group plan, let's say like your spouse, then what you're paying in Medicare premiums can be tax deductible.
And another question is about investment income.
That can be a tax opportunity if you handle it right. Now, think about this. When you retire, let's say you get to the age of 65 and you retire, your income comes down. Well, as your income comes down, your capital gain rate can come down. The upper rate is 20%, but as your income comes down, then that can drop to 15% and even 0%. So make sure that you're timing things right with investment income if you're selling off assets, real estate, so that you get the best capital gain treatment you can get once you're retired and your income has lowered.
What about long-term care expenses, which is kind of in a similar vein? I mean, where does that fit?
Well, as we know, long-term care expenses can be very high. It's an expensive proposition. People can be out of pocket $5,000, $10,000 a month paying for assisted living, home care, nursing home care. So whatever you're paying out of pocket that's unreimbursed, that can be tax deductible. Also, if you are a family caregiver and you're spending money out of pocket caring for a loved one, then some of what you're spending can also be tax deductible. Also, if you were to sell off a life insurance policy that you own through something called a life settlement, and you have an immediate need to spend that money on long-term care, that can be a tax-free way to get money out of a life insurance policy.
How about retirement accounts? Is that a tax opportunity or a tax trap?
Well, now that's a great question because that one actually can be both. In the early days when you're putting money into retirement accounts, let's say you're putting money from your paycheck into a 401k, and I encourage everybody, put as much money into 401ks as you can because that's pre-tax dollars. You're not being taxed on the money that's going in. And then the money that's sitting in a 401k or an IRA is going to grow tax deferred for years. That means you're not paying any taxes on the growth of that money for years to come. But here's where the trap may come in. If you take money out too soon, before the age of 59 and a half, you can be facing a 10% tax penalty as well as paying income taxes on the money you've taken out. If you wait too long and you're not taking money out of the account at the required minimum distribution level, which is at age 72 and above, then what you're not taking out on an annual basis compared to what you're supposed to be taking out, you can be paying a 50% tax penalty on that difference. So you got to be paying attention to not take money out too soon, but also to not wait too late, or else you're facing tax consequences on both sides of the equation.
Got to find that sweet spot, and we're grateful for people like you.
Exactly.
Before I let you go, any other tips for tax day?
Yeah, here's my number one tax tip of all time, and that is taxes are complicated and things change, particularly when you're a senior. As you start to incorporate entitlements like Social Security and Medicare into the mix, you start to try and navigate things like we're talking about with capital gains and investment income, selling real estate. You want to work with a tax professional. It is worth spending a few $100s to get the advice and the guidance of somebody who really knows what they're doing to help you navigate through making sure that you're getting the benefit of tax opportunities and you're not falling into these tax traps.
And thanks to Chris for sharing that information with us.